Dinesh Kumar Khara, the chairman at SBI, is with us. Let me take it across to Nikunj for that chat.
Now to bring on board Mr. Dinesh Kumar Khara to talk about budget, expectations, outlook on economy, and thoda hint kal ke numbers ke baare mein. I'll try my level best to get some hint out from Mr. Khara on what we should expect tomorrow morning. So Mr. Khara, good morning. Thank you for joining us. Sir, the expression on your face is telling me that we are in for some surprises tomorrow.
Good morning, Nikunj. I think we'll have to wait till tomorrow morning to know what really is there in the number.
Okay. The budget numbers, Mr. Khara, are impressive. The fiscal deficit number is is impressive. And one would say that this is a budget which just instills a lot of confidence in government's outlook for economic growth.
No, you're right. Absolutely. I think the way this budget has come in with the kind of focus on the fiscal consolidation and also the kind of focus on the growth, and that too led by infrastructure. And also the newer focus which has come in for the solarization, as well as for the housing for middle class and also in rural sector, special thrust in these areas. This actually augurs very well in terms of the growth potential which it holds for the economy and the way it will really roll out in the economy and various economic sectors will certainly be very positive for the overall growth for India.
Mr. Khara, the fact that the commitment towards capex has come down, A, because of base effect, and B, because of government's commitment towards fiscal deficit, could that have an indirect impact on the economy and especially infrastructure sector?
No, actually, what I expect is that normally this kind of government spend on infrastructure will certainly have the multiplier effect, and I expect that even private sector also to come in now. So I think it is going to be a combination of efforts by government as well as the private sector, and which will eventually reflect in the growth numbers of the economy.
So, Mr. Khara, can I assume that this is also an indirect message from the government, and you are in a better position, sir, to perhaps give us the ground reality that in India, finally, that private sector nivesh ka mahakumbh is the word, sir, has started?
Yeah, naturally, the private sector investment is a function of their confidence in the growth potential. And I think sustaining the infrastructure, keeping the fiscal deficit in check is a very clear reflection in terms of ensuring that the economy is healthy. And if at all the economy remains healthy, and this kind of fiscal numbers will actually give confidence to the international rating agencies, which also will lead to an improvement in the rating for the economy as a whole. So I think all this will move towards the lower interest rate trajectory, which eventually is going to be for the ultimate good for Indian economy and the Indian industry.
Mr. Khara, looking at the way how the entire banking sector currently is moving, the war of liability still continues. If I use the private banking numbers for benchmarking purposes, looks like banks will have to shell out that extra, they'll have to walk that extra mile to get deposits now. Do you think the concern on getting deposits and especially low-cost deposits is a real concern and it's here to stay?
Actually, Nikunji, what has happened is that, deposit in the economy is a function of the overall liquidity in the system. That is one part of the story. The other part is that if it is not in the banking system, it is either in mutual fund or it is in life insurance. So the fact remains that these deposits are channelized into the economic activities, either through the banking system or through the markets. That remains a fact. So I think eventually for supporting the higher economic activity in the economy, the need is to channelize the savings into investments. And also the other piece is that if at all the fiscal is the way it is, and also inclusion of the common debt paper uh, in the global index, which that will also attract the foreign capital into the economy. So that will also be the additional source which will augment the lendable resources or the economic resources for supporting the growth in this economy. So I think, to my mind, this the fiscal consolidation and the kind of taxation numbers which you get to see in terms of GST, etc. This actually augurs very well, because I would say that eventually it should show up in the sovereign rating, and eventually that sovereign rating, improvement in sovereign rating, will also help in attracting the global investment into the economy.
Mr. Khara, the fact that fiscal deficit will come down, India will be part of global bond index soon. The flow into bond markets would be extremely strong, which means that it will have a near-term impact on the yields. Are we in for a regime where we could be in for big treasury gains and a huge uptick in yields, and that is positive for the banking sector?
Yes, I would say that I expect likewise that it should be positive for the banking sector, and yields have already started trailing towards the lower side, and also the lower government borrowing from the system also will leave a room for it, will actually create a space for the private sector also to borrow. So I think all these are the factors which are eventually indicating that there is a ample opportunity, and also I think ample scope in terms. And I think the way we are moving towards it would be the 4 trillion economy very soon in the year financial year 25. That's what my estimation is. And to become 5 trillion in the financial year 27-28 is almost certain at this kind of a pace.
Mr. Khara, a concern which some of your peers have been flagging off that India's saving rates are dropping. Money is moving into financial markets. While banks are happy that they are getting a lot of fee-based income by selling mutual funds and opening brokerage accounts, but that is coming at the cost of SA, which is having an impact on the liability cost. Is this a sector-wide concern and a genuine concern?
No, I would say that banks are always the channels through which the money moves, whether into investments or into deposits in the banking system. See, as far as channelization of the money is concerned, it will all happen through the banking system. So I think eventually, and that is something which helps the system as a whole to grow, and also to support the other sub-segments of the financial sector also to grow.
So you don't think there is a worry into this drop in savings, the fact that money is moving into capital markets, equities, stocks and mutual funds? That's not a worry.
To my mind, it appears to be a temporary cause of concern, but eventually, if you will look at it in the overall context, see, money stays within the economy, money stays for supporting the economic activity. So far as it is like that, it will only lead to enlarging the pie. And that enlarged pie also will create opportunities for the banking system for shoring up their deposits.
Sir, I'll respect the fact that tomorrow your numbers are there and we are restricted to talks in terms of specifics for the quarter gone by. But if one has to really understand the big picture, which is what you mentioned, that India will move from 4 trillion to 5 trillion and $5 trillion to 10 trillion in next coming years. It's a matter of 5, 6 or 7 years. Where do you see a huge explosion of credit? Which sector do you think is going to be giving that booster to the India, and for a banker and for a bank, that is the next growth frontier where you want to lend?
I would say that perhaps there is an opportunity for all sectors to see the kind of growth and also, be it rural, be it SME, be it corporate, be it retail. I think there is an opportunity for all the sectors to grow, and perhaps almost at a uniform pace too.
Mr. Khara, when we started the year, the GDP growth estimates was about 6.5%. That RBI number has now gone to 7 plus, which means we are in for a surprise. You always said that SBI's growth would be a function of the real GDP growth plus the nominal GDP growth plus 2%. So if I add the maths here, what your initial estimate at the beginning of the year is, what the nominal GDP is, and what your formula is, looks like, sir, we are in for some surprise.
Let's see. how it really pans out. But when is the nominal GDP plus inflation rate is something which is the likely determining factor for the loan book to grow.
But Mr. Khara, just to wrap it up with few last questions. The fact the Reserve Bank of India raised a red flag, at least on the unsecured loan, and SBI has a large exposure to the retail book. What is your understanding of the risk which currently is there, at least in the unsecured stroke, the retail category?
So as far as we are concerned in State Bank of India, I've been saying in the past also and will reiterate. For us, as to the quality of the unsecured is concerned, it is perhaps better than the secured. That is one. And secondly, our unsecured is not actually unsecured because we are lending to only those people who are maintaining their salary account where we have got a very clear visibility in terms of the cash flows. So that is something which gives us, which has led to a situation where the book is, which we are having is very different in terms of character as compared to perhaps rest of the industry. And but I would also like to mention what perhaps RBI had in their mind was to ensure they were also encouraging growth, but they always wanted that it should be healthy growth. And when it comes to the retail, healthy growth means that the entity or the bank concerned should have elaborate structures to assess the risk, underwrite it, and also to they also must have effective collection machinery so that the book remains intact. Because in case of retail, very often we have seen that there is a tendency, if at all it turns bad, it becomes very sticky. So that is the reason why perhaps RBI has taken some such measures, which ensures that the industry should witness the healthy growth in the retail credit.
So, Mr. Khara, allow me to summarize our today's interaction. And if I summarize our today's interaction on the following terms, that Dinesh Kumar Khara, Chairman of SBI, feels and is of the view that the credit cycle is strong for next 3 years and we are in for a double-digit growth expansion where NPAs would be low, yields would be decent, and corporate sector capex will surprise us. Will that be a fair summary for next 3 years of SBI's outlook?
I tend to believe this.
Well, good to have you, sir. Thank you very much, and we shall connect with you tomorrow morning, keeping fingers crossed that, as always, you will delightfully surprise us because we always remember your mantra: under promise and over deliver.
Thank you. Thank you very much, Nikunj. Thank you.